Live event. Today, we're doing live market analysis for everything that's hot this week. And there is a lot going on in the markets with NVIDIA earnings only 24 hours away or less than actually. And of course, some big movements in markets around the world, including the S&P 500. I hope everyone's had a great week so far. And I think it's just getting started in terms of volatility. We could be leading into what is often a very volatile event, which is the back end of February into March. My name is Thomas Atkinson. As always, I'm joined by Ty and Abella. How are you going this week, Ty?
Yeah, good, thank you. Welcome, everybody. And boy, oh boy, we've seen some serious action in the market. And look, yeah. Tom, I think with the earnings that we're waiting for, we've got some amazing things happening in terms of technical analysis on all-time highs, basically, on the most important indices in the world. And I think we can probably say that quite comfortably. So, we're at a very, very precarious turning point where they wouldn't want to earn too low below the expectation that the market's hoping for, because I think that a correction could certainly kick in. It's very, very interesting, but the bulls might kick in as well. So looking forward to getting into it.
So there's some really interesting points coming up, and obviously today we'll be covering off the US 500, NVIDIA. We'll also be looking at gold, US oil, and oil in general, and then of course some currencies as well. So plenty to discuss, even a little bit of crypto later on. Just before we get started and we go through the live analysis, obviously we do have a risk warning. We'll see you in just a few minutes, or actually a few seconds. Okay, let's give a shout out to everyone that's joining us here, Ty. So we've got Mustafa, Michelle, Warwick. Great to have you here, Warwick. Gary, Royston, Anthony, Peter, and Oski. That's just to name a few that are joining us. Make sure to give it a big thumbs up as well if you do enjoy this content and you like the live market analysis series that we're doing for Pepperstone at the moment. So let's get started with the US 500, and we'll break it down here together. One of the big things about the US 500 at the moment has to be the trend that's remained intact with what we call the 20 moving average. Now, what we've put on this chart is a 20-day moving average, and this is consistently one of the most important moving averages. Effectively, the 20 is often considered the most important, and the reason why, and you see it in all those kind of special reports you get out of Bloomberg terminals, it's because it kind of simulates in some ways the calendar month of trade. When you think about it, we have obviously approximately 30 days in a month. We obviously have weekends, and we have usually one or two kind of public holidays around the world. So approximately 20 to 21 trade days is around what we get in a month. So that's why the 20 daily moving average is so key. But what you'll notice is that with any moving average that you use, we have that 1-2 system that's happening right now, which is, of course, that it's tapped into the 20, it's found a new high, it's tapped into the 20, it's found a new high, it's tapped into the 20. And when that happens 1-2 times, the third, the fourth, the fifth, every single one from that point becomes an interesting level for us to target. The difference this time, though, is we didn't make a higher high. So you'll notice that the market came down, hit 20, came up, made a higher high. So that's a higher high. Then we made a higher low. Then we made a lower high, and now we're coming back down to test it. Now, that changes a lot, doesn't it, Tyrone, when it comes to the performance of this market and what it's telling us. Would we trust this 20 hold necessarily? Generally not, yeah?
Absolutely not. Look, we always talk about this in our live seminars and all of our courses, actually, that you're on the high alert now where the market makes a lower high and is testing the 20 moving average. If it's going to fail, the failure point is potentially among us right now. And on top of that, Tom, we've also got an all-time high, right? So, I mean, at the end of the day, we're not only dealing with just market action. For a normal market trend that could be potentially finishing up, this is what we're looking for, a lower high and a test of the 20 moving average is extraordinarily important. But the fact that the previous high was a brand new all-time high for the market is very, very significant.
Yeah, the all-time high is a huge deal. The 5,000 is also a huge deal. We spoke about this last time, and I think I shared a kind of piece of information, which was basically that each 1,000 increments, so when you went back to 2K, 3K, 4K, and now 5K, we've generally seen a pause in the market, if not a pullback, just before the 1,000 number or just around the 1,000 number. And obviously that heightens everybody's discussion around this point of time. So we've got some interesting points of view here. We've obviously got the technical analysis, which is the lower high. coming into the 20. We've got the 20 in general being the bull run level that's pretty consistent at this stage. And then, of course, we have also the seasonal weakness that tends to come through in February into March, which we've discussed last week. And we've actually talked about this for the 2 weeks now that we've been doing this live market analysis series. And it's been doing exactly what we expect, to chop around, because to stop what we call a freight train of a trend takes a little bit of time. And that's exactly what's happening. It's got to pull back in time. Now, the reason we mentioned NVIDIA before is this is probably going to be one of the big catalysts. And I want to talk about two things here, Ty. NVIDIA, which is obviously one of the most popular stocks. You can trade this, I believe, within the Pepperstone platform. And it basically is going to trade between a plus and a minus 11% movement today. Now, considering this is was a $1.8 trillion stock only 24 hours ago, this is a big deal. Probably one of the biggest daily moves that we're ever going to see. I mean, we're talking 200 billion, Ty, probably in a day.
It's extraordinarily huge. And it's really exciting from a market standpoint to really see what this does to the market. The market has become very, very immune to shocks in recent time. But yeah, it could be a catalyst for potentially a move up. I mean, look, we're not going to be all doom and gloom about it. I mean, It may well shoot the lights out, and we might see a brand new high, and indeed the 20 moving average does hold, and off we go. So it's very, very possible that that may happen. So it's going to be it's very, very exciting, and this is what it's a very, very important day on the next 24 hours, because NVIDIA has reached heights now that you haven't been seen for this stock basically ever.
Yeah, well, I mean, this thing's gone up almost 50% since the last earnings result. So that's what's at stake. So there's a few things that are going to be broken down over this next 24 hours. We've got the FOMC meeting minutes, which is obviously going to have a big effect on everything, because people are starting to get potentially confused about whether we're going to see rate cuts this year. So we will want to be looking at our US 10Y and US 02Y yield spreads, which we'll talk about later. And we're also going to be wanting to focus on NVIDIA. So this has been very strong. Now, I noticed, Tyrone, I'm just left the 20 here for a reason, because I kind of wanted to discuss the idea that pre-earnings, this is actually showing the biggest amount of weakness so far. So since that previous breakout, we've hit higher highs and higher lows and higher highs and higher lows the whole way up. Now, notice that again, similarly, we've come down, we've got a higher high, then we've come to the 20 moving average, then we went to a lower high, and then we've come to the 20 moving average. Now, I wouldn't have been bullish at that 20 moving average anymore, because we failed to make a higher high before coming down to making a higher low and touching the 20. And this is a really important thing. And that's why I want to put it into the US 500, because we've done this on the show before months ago. And it just always is something that I think is quite simple, but often overlooked by traders, that price action and making price exploration towards new highs is very important, because it shows you the momentum is still strong in these markets. So NVIDIA made a lower high. It then went through and broke down, and it's by far certainly not in a overall downward trend yet. You can see here the daily 20 moving average still holding up. First time it's touched this actually in $300, Tyrone. But this level here is going to be very, very important. So we've got a key zone around 680. We've got a key zone around 600, which is the next market structure. And then, of course, we've got what we call the 700 and 750 levels. Now, I went and did some options, discussed, like just kind of looking at the call walls and put resistances and stuff like that, Ty. And these levels were coming up all as key zones, but it makes sense. They're also psychological levels. So you'll find with technical analysis, you can see these. And if you take a percentage, notice what 600 is, about 11%. If we take this percentage from here and we bring it up to around 750-ish, we get 750, 11%. So the market's almost perfectly positioned to either smash down into a big mega support, being 600 range, or potentially break a new high and go 750. And these, I just think it's really interesting that we find markets preparing ahead of news, don't we, Tyrone?
It's amazing how it does that. And even the indices do it, but this stock in particular certainly has. I would probably argue that this is probably the most anticipated earnings out of this whole earnings season. I know that a lot of emphasis is placed on the banks, but I think this is the one that people have really been waiting for. And I think this could be, it's hard to say that, potentially you could put a catalyst on what could move a market, and you wouldn't think that one stock could. But if one stock was ever going to move a market into a different direction, this may well be the one.
Yes, this is going to be the catalyst that I think really does make a market go bullish or bearish. So obviously a positive result out of it and a strong move to the upside, that's potentially going to take what looks like it could take us to a new higher high for S&P 500 along with the FOMC meeting minutes. They'll obviously need to be digested. They will come, by the way, at 2 p.m. New York time versus Nvidia earnings, which is after hours. But if we do get the new higher high, we've got to, think about the next sequence. And obviously, if we break underneath this 20, we've got to think, what would this percentage move for the markets? Now, the reason we're bringing these together is because this will really shape or make the next week. If we get that higher high, then we're probably, stretching to 5,100, 5,150. They all become very plausible, even 5,200 as the biggest stock that's really run the rally over the last 12 to 16 months is continuing to do very well. If it fails, though, at this 20, we're talking about next level demand. So the reason we want to do this analysis is just to show you that there's really not much stopping the market between around 49.50-ish zone, obviously 49.20 being the key last lows, but 49.50-ish and 48.50. So if we do manage to close underneath this 20, the next logical step for the market to go to would be the 50 and the previous demand. So I think it's it's interesting because as a day trader or as a scalper, you're going to want to see these higher timeframes so that if you start breaking underneath levels, you can say, okay, well, the chance of this being a momentum-based move is stronger, and then you start to analyze the markets that way. So if we have here and we put a line through it, you'll notice 49.20, previous demand, previous demand, previous demand, very strong reactions, generally with big wicks. That's telling us that the market is very, very strong around this level. If that isn't a big wick next time, what's that telling us? It's weaker. And that weakness is probably going to push through to that next 48.50 kind of zone. And if we get underneath there, then we're talking swing traders coming in and moving towards the negative side. So there are so many different indications going on here for the S&P type, but I would say this is arguably, maybe not even arguably, the most important point that we've seen since the October rallies for this market in terms of actual movement and the ramifications of what happens here.
Absolutely, and I think it's very, very important for all of the viewers to understand as well that when we're talking about the support levels at around that sort of 49.20 and 49.50, and also even 48.50, it's very, very important not to just jump in when that market gets touched there. You must wait for a short-term change of trend. It's very, very important that you factor that in. Because a lot of people make the mistake of just setting a pending order long and just jumping in saying, well, that will do. But
yep,
move down could force everything down very quickly.
All right, so let's have a look now at the dollar index. So the dollar index is actually another one. Again, the reason I'm talking 20s today is because you'll see a lot of markets at 20s, but it's come back down to the 20, which just so happens to be previous wicks, also happens to be previous demand zone. So a lot of different structural concepts happening here on the markets, and you can see it's finding a little bit of buying pressure. So what we would want to do here as a day trader is obviously we know the FOMC meeting minutes are going to push it around. Will we get higher for longer? Or will we see weakness? And you can see again on this market, it's been making a series of lower lows, lower highs, lower lows, and it hasn't made a higher high yet. Now, there is a little sequence event down here, which will have some 5-minute, 15-minute traders starting to think that the dollar is going along off this zone. And that's fair enough. But the safer kind of move is to get back above this level here, then to see, of course, maybe a market pullback after that, and then to go into strength. The trend, right, by the way, on the US dollar recently has been strong. So this is a key point. But I really want to get into the euro tie because although the dollar is on that big key level, the euro had me really looking at the market in a different way when I checked it out in the previous session. And let's go through this with everyone right now. Firstly, we have 2 weekly, so we start here on the weekly, 2 weekly rejections that kind of like look like bullish hammers. So these are pretty significant levels. We see a lot of strength here coming off the bullish hammer. Obviously, there is a rejection of some kind. Someone's getting excited. They're trying to buy up that euro. When we go to the daily, though, you'll notice there's a downward trend here on the euro. So we have a pretty solid downward trend. And I don't really like to use downward trend lines much, Ty, as you know. But what I do like about this one is we're making a series of lower highs and lower lows. And then recently, we've actually switched that to make a higher high. So there are some signs here to suggest potentially that the euro actually wants to go long, although it hasn't been able to do it yet. If we do end up closing above this trend line, I think it could be so significant. We'll have the dollar through the 20 moving average because they'll trade opposite. So the US dollar would weaken and the euro would go through this trend line. How big a deal would that be?
I think the euro is a great idea. That would be engaged here. I think that line, we don't love those, but when they're there and they're supporting the evidence that we're seeing, I think it's really, really important to factor it in. But I think the euro, look, it's one of the most traded currencies in the world. But it's also behaving itself in a very, very technical way as well. So I think that's really important to factor in.
Yeah, it's really been very nice in a technical short, and things are changing here a little bit. I've got some data that I might bring up, and I'll just kind of share this with you. So let's have a look here, and I'll just quickly pull it up. And I'll have a look here at the overall sentiment right now on the euro, just to see what people are generally doing. So here's a split for you, Ty. 49% of people, basically us being retail traders, are currently net bullish, and 51% of traders are bearish. On the US 500, about 68% of people are bearish and 32% of people are bullish. Now, that's some interesting stats, and I'll say why. Because firstly, it means the euro traders have no idea, at least retailer has no idea. So something big is about to happen, which will push into one direction. And that makes perfect sense in some ways, but I actually like it when you see a technical and everyone else disagrees with you. They're some of the best, aren't they, out there with everyone in the chat. And the US 500 being at 68% bearish, you might think that's still high. I can tell you that I've been watching it since October, and in general, it has been somewhere between 75 and 92% bearish, generally from retail traders. So there's clearly something going on where people have been convinced of the buy the dip there. And this euro is a coin flip at best in terms of what people are thinking. But I really feel like there is a huge catalyst event here, potentially over the next 24 hours, with the FOMC meeting minutes and NVIDIA causing some big volatility. So do not discount the possibility of large moves after this event.
Yeah, and I think it's really important that, and this is why I love the weekly shows that we're doing now and doing the live analysis, because we can really build, every week there is something happening. There's no question, Tom, we know that, but obviously some weeks are bigger than others. Some weeks are definitely bigger than others. So it's really, really important. I think not only can we recap what we talked about the week before, but we can plan for the week ahead as well. So, and this week is no exception. You're probably going to hear us say a lot that it's a really important week news-wise, but there is always something happening.
Look, last week, one of the members of the community here, Ty, they mentioned copper, and I'll go through that in a second. And we really liked it from a technical buy base, and it's done very well. Let's just say that. Let's have a quick look here at the euro, though. So talk about structural levels in terms of the lows. Of course, we are finding ourselves at a resistance. We know I've put in just a couple of lines here for the different levels that I think could matter. The one that's at right now, I don't really think this is a key zone for buyers, but obviously down here at the 107.89, that's going to be a big level because we have seen a lot of buying base, what we call a floor in the structure. If we do end up getting underneath something like a 107.35, then I think probably the market is going to try to really push down and continue on lower. And that's going to be, of course, a dollar index that's strengthening. It's breaking through that high we looked at before, and it's going to be more of just the trend. But if the US dollar weakens and the euro melts up through this level, I would say that pullbacks have got more potential of being buys, at least from a technical breakout standpoint, because that would mean we're breaking through the trend line. We're breaking already up to a new higher high. There'd be a lot of stars aligning for a big switch on the euro to the strength side, and for the dollar to the weakness, should the dollar make a break underneath the 20 moving average. I want to bring copper up, Ty, just here while we're chatting, just because this was one, as I mentioned, that someone mentioned here in the chat near the end when we had some Q&A. And what a thing of beauty this was. A great level, and we were talking about it down there, and then a very significant rally that came through. So, really nice move on copper. I think fairly replicable. And a lot of this had to do with the base. So I just thought it would be a bit of a learning curve, because it has the trend line in it. So remember we mentioned before, we don't like to use trend lines too often. Well, I used it again last week. And it's because copper was making a series of lower highs and lower lows. And then what you'll notice is it made a switch. Now, it made a switch and broke through the trend line, okay? So it's a really key difference that we're currently seeing between this and the euro. But I would love to see the euro go through. And then it pulled back afterwards. And when this happened, there was a good chance that pullbacks would be met by bull demand, because we knew it was a key level. So just like the euro and the dollar index are key levels, if we go over here and we take a look at the charts and we go specifically to the daily, you can see previously we had resistances, we had supports, and it's at what we call roll reversal, which is a pretty basic knowledge for support resistance traders. So very, very key zone. Copper, nice one, obviously bought up by members of the community. And it could be that copper keeps strengthening, by the way, Ty. 395.4 is possible. And if we break through 4, that's going to be a big zone for the markets. All right, let's move over to the next one. So we've covered so far US 500, a little bit of NVIDIA, talking about the 11% expected move. We've obviously talked about yields. So both yields, US 2 and 10-year yields, are at very pivotal zones. But then we've got the US oil and UK oil levels. Now, these, I've got to say, a little bit disappointing when you think about what they've been doing. So they broke to highs, not quite making new higher highs. So you can see here, it broke to a new higher high here, but not over on the left-hand side. But it did get a better daily close, and it did kind of do a better weekly close. So we find ourselves with oil at demand ahead of today's session. And to guess it, if you were thinking, well, I guess you would be guessing it's still on an upward trend overall. But at this stage, we're just straight into that demand. So here's the demand. Here's the support, or demand level. If it does breach back up, then of course this is going to be a very critical point, very big turning area for US oil towards continued strength. And I think if it gets through 79.80 a barrel, Ty, this is probably moving to around 82.50 to 84.50. And that would mean that yields are up, dollar would probably be up, and I think the stock market would not like it.
It's a big chance, and I think you're right. The stock market would not like that at all. So, look, it's not often that oil is going to be a safe haven, but at the moment, everything seems to be aligning, Tom, where, all of the big players, gold, oil, dollar index, euro USD, is all waiting for NVIDIA. I think that it's all waiting.
And the FOMC minutes,
result. It's unbelievable. It's actually the whole, all the important, big trading instruments that are probably, they're amongst the most traded in the world now, no question about that, are all waiting for this one event. And look, it could be just a catalyst. I mean, when we say it's just waiting, obviously there's far more bigger factors at play, but I think the market is looking for direction. And I think that's probably what's more important here. It's looking for a catalyst for a directional move that's either going to continue to all-time highs, or we're going to see a bit of a pullback that's going to see maybe some short-term weakness, even maybe medium-term weakness to get to those levels. And, something like the S&P could easily fall to a 4,600, and no one's going to be completely shocked by that.
Yeah, like a 46, especially a 47, I think, and I've got a watch reaction here on the 47 level. That has so much synergy. You've got anchored VWAP coming through. You've got a 20 moving average on the weekly around that level. You have daily 200, therefore, sitting around that level. Previous demand. There's a lot of synergy here. And one thing that we haven't bought on the S&P just quickly is going to be a Fibonacci. So there's been almost no pullbacks here on the S&P. And you'll notice that 4,700 in particular hits right into a 38.2 fib. So, there's no real surprises that this is what a lot of people are starting to call for. Some people obviously have been feeling very, very bullish on the market, rightfully so. It's been an absolute, tank. But with 5K and some of these metrics here, if NVIDIA doesn't present, it could be 47 faster than we know it. Let's move to gold, because gold is bucking the trend a little bit. Yes, we've seen some weakness on the US dollar, but really gold has pulled all the way back up. And it's come back to what we call the most traded zone, which is around 2032 to 33. Now, at this level, what I'm saying here is basically this is the most traded level for the last kind of like 2 months. And effectively, that means someone is buying, someone is selling pretty heavily at this zone in particular. And we've seen some nice interaction with it. We've often seen it act as resistance. We've seen it act as a consolidation level. We've seen it act as a support over here approximately. And that means that this could be a zone where we also see a seller return for gold. Now, I think gold's moving up, Ty, because people are getting concerned about sticky inflation again and persistent inflation. It's what we call stagflation as an economy. And effectively, that is not what we want to be in. I know some people might say, oh, let's get stagflation. Sounds good. No, stagflation takes years to get out, and it's it's pretty nasty for everyone involved, unfortunately. It can send us into multiple recessions as well. So hopefully that's not the case, but we do find ourselves at 2033. So from a technical level, this is a zone on gold that may want to be watched. And what we're seeing right now coming into this is a series of higher highs and higher lows. So price action wise is still strong. Maybe we get a lower low, and for day traders, that might be a signal to potentially start scaling in. And then if it pulls back, to look for further weakness from that pullback. So something like this is a real possibility on gold. What are your feelings towards gold, Ty? I don't think we've spoken about this one today or last couple of days.
I think gold it's at a critical point, even though it doesn't seem to be. I think that we're probably awaiting a really big move on gold, and whether it actually goes with the S&P in whichever direction the S&P goes or not, I'm not so sure anymore. I'm not. It was sort of moving in sync for a while there. I'm not so sure that it's going to do that now. I think that it might be a breakaway trade in itself. And I'm not saying it's going to go to all-time highs, but it may well, even if the market sells off. And I think it probably, even though they have been moving in sync or inversely at particular periods this year, I think that the breakaway that probably is required really for gold to be a very good tradable commodity for all of us is not very far away.
Yeah, gold's been stagnant, I would say, for a while. So ever since that big blow off, which we were very excited about this until it blew off. In fact, I honestly really thought that gold was going to make it to around 2,500 to 3,000 an ounce on that next run, and it still may do it. I'm still bullish on gold over the medium long, which means a year or two. But yeah, this was a clear sign of a blow off. Not what you want to see. As soon as I saw that rally, I knew the gold was going to go bad. It's actually quite replicable when you see those types of big rallies. It hypes people in. Speaking of big rallies, Ty, I got to go trade. I got to go look at Bitcoin. So what I mean by this is we've got to check it out because Bitcoin has moved so much, and it's been, I think, the strongest rally on record into a halving cycle in terms of just general monumental move. Now, I think that around this level, Bitcoin's going to struggle, and it already is struggling at this time of recording it right now, because Bitcoin is what I would say, at a bit of a resistance at what I think is sometimes considered a take profit level by some technical traders out there. Swing traders in particular may have been looking at around this level. And I thought we might stop around 51K. We've obviously gone a little higher than that. We've gone to 52,500, but I thought this is a good one to bring up because it's a big rally, and now we're stopping a freight train. Now, it's been multiple days here. 1, 2, 3, 4, 5, 6, 7 in terms of the overall movement. So let's have a look at the smaller time frame. 7 days of sitting here. Could we see a Wyckoff? Do we see any type of structure that presents that type of way? And what you might notice here is we get kind of like this first rally, and this is a good learning experience. So we get first rally, then we get a secondary rally. Now, some people think this is like a preliminary kind of resistance kind of idea. This could be a buying climax, and it could be, because remember, we make a higher high over here, that this is what we have as a UT. Now, a UT in Wyckoff terms is effectively a trap where markets make to a new high to push liquidity. And remember, if you have a momentum-based system, what are you going to be doing here? Well, you're going to generally be buying. Now, if you're buying, that means that somebody that wants to get rid of their trade, let's say a big player, they can sell, because for every buy, there's a sell. For every sell, there's a buy. So Wyckoff theorized that there was a way that market participants would do this. And it could be that we're actually seeing that place in here in Bitcoin. a lot of trade. What I often like to do here on the platform is to use a fixed range volume profile through the structure. And the reason I'm using one of these, and this is through the TradingView platform, which of course you can get from Pepperstone, and Pepperstone are integrated, I think, with some of the best reviews as well. So you can check that out, guys. And you can see it's actually very fair distribution of price. Now, sometimes you get really high distribution as well, where you'll get huge amounts of sellers at the peaks. In this case, it seems to be really well distributed. So whichever way this market breaks out, whether it be to the downside, which obviously hasn't been taken out yet, or whether it be to the upside, because we're getting what we call a pullback in time at the moment, or a consolidation, could be, I think it's a coil towards a fairly large move here. Let's read the chat. Now, if you do have questions, please feel free to ask them anytime. So we'll answer them throughout. And thank you as well to the many people we've got viewing. If you do enjoy these content, then make sure to give it a thumbs up as well. It does help us out. Zachary says BTC is pushing down at the moment, not breaking down. Well, that's correct. It's not breaking down yet. We're in a structure creation here, Zachary. So I guess you would probably agree with that we may have trapped liquidity at the highs, which is that 53K kind of level, or just before 53K. If we do breach down, though, as in sell below that kind of, what is it, 5679 or 5700, I guess you just have to look at a couple of different feeds. This unless it instantly picks back up, is likely to be a little bit more significant due to the market structure that's placed before that. Andrew G says alt season when with the WEN. Yeah, so alt season's an interesting one. To look at alt season, the way you would do that, some good crypto questions coming in here, is generally use an ETH-BTC combo. So you would have like some kind of Ethereum / BTC. We can probably, which one are we going to use? ETH-USD / BTC USD. Probably can do it this way. And we're getting a 0.1 here in terms of ratio. Let's go to a weekly just so I can show it to you. Notice here that Ethereum is at its lows. So this is back in 22's lows. It's nowhere near as bad as it used to get when we got down to these structures. This is the wrong one. I think if we just go ETH-BTC. Type it in, guys, properly, not like me. But the point is here is what we're looking at is, yeah, that's better. So if we use this code here, you can see there's a base, and that base has come through. So it's fair to say that Ethereum is at a support to BTC's current price. Now, is it expensive to BTC's current price? The answer would be generally no. And how Bitcoin often trades, and this is just a theory throughout the last couple of cycles and generally how it has gone, is you usually see Bitcoin go first. Bitcoin then holds a trade or holds a position. Then Ethereum makes its way up to get a better ratio because it's the second most well-known coin and pretty much second standard of cryptoverse. And then you get the alts after that, and then you get the sub-alts after that, which is usually when you're in euphoria. And at the end of a cycle, all sorts of weird things happen. So we're pretty early on here because we haven't even gone into a halving cycle yet. But you can see that ETH versus BTC is sitting on kind of a support, suggesting that Ethereum is maybe cheaply priced, cheaply, inverted commas, compared to Bitcoin. So what do we get here? We've got a little bit of structure. We don't have a breakout towards the upside yet, but I use it more as a positional ratio. So it just kind of suggests that Ethereum is at a better level than others. Frasato, says Tom here. Tom, is TradingView a reliable trading platform, or you use only for analysis? Look, Pepperstone have many different platforms that you can trade with. You obviously can do analysis in TradingView. We find it to be quite good. It just depends on the type of instruments that you also want to trade as well. So yeah, you can definitely execute through it, and it's pretty good. It also depends a lot on what type of trader you are. Are you somebody that swing trades? Are you somebody that scalps? Are you somebody that needs ultra, connection stuff, I would suggest that you have a chat to your Pepperstone kind of sales representative, and then have maybe even a chat with the techs there, and they can tell you more about it. But it works well for us, and we like it very much. It's not even arguable that it is the best, in my opinion, the best technical analysis software as well out there. So it's beautiful to have it all in the same spot. And you know what I really love as well? If you have the Pro version or the other versions, Essential or whatever it is, you get the ability to set alerts. And that's a huge deal, especially when you're thinking about this. So let's say the gentleman that asks about alt season, well, maybe I want to set an alert for this. So I've got an alert here. I can get that sent to a phone. I can put an alert on a trend line, all sorts of things. You can see here the Bitcoin BTC seems to be going down the trend line after I've said I hate trend lines today. And there's so many different ways that you can set it up. So love it for that stuff. BTC equals gold. This is the comment from the chat, and it says Ethereum equals silver. Yeah, so I've often said that. So gold sometimes is the first runner, and silver's like the crazy version of gold. So if you ever do trade metals, specifically gold and silver, just remember silver will be usually about 2 or 3 times the move of gold. So if gold moves 1%, silver's generally going to move between 2 to 3%, and it can get, let's say, a little bit extreme sometimes when you're trading silver. Do be careful about contract size as well whenever you're trading metals, because not like a copper single contract is very different. Has anyone else in the chat here actually ever been caught out by that? Caught out by the idea that you trade like a silver contract or a copper contract and it's a little bit bigger than you think? Just make sure you always practice risk management and check it out early. So another question was about Ethereum, and Ethereum's hit about 3,000, which is obviously a psychological number. So it makes sense that with Bitcoin struggling here, maybe they'll all kind of struggle for a little bit. Of course, I'd watch Bitcoin most closely, but Ethereum to a Bitcoin ratio seems to be at around the right zone, at least from the previous technicals. So we've got US 500 at a key zone. We have the NASDAQ already trading below in futures market, not in the real market, but in futures markets below the 20 moving average, which is significant. You can see here multiple times. Again, a lower high out of the most important market right now. And a combo that you might want to be tracking throughout the next week, and I thought I'd just add this in here, is potentially the Magnificent 7. Now, this is not an exact way of comboing the Mag 7, but I'll put it on the screen so you can see what it looks like. Here it is. So you can actually, in the TradingView platform, go Microsoft plus Apple plus Meta plus Google plus Tesla plus Amazon plus NVIDIA, and you'll get something that looks like this. And what this does is it allows you to see kind of the strength or weakness of arguably the most important stocks for the S&P, for the NASDAQ, and for generally the markets around the world. And you'll notice they came under a bit of scrutiny over the last 24 hours, hit the daily 20 moving average, which is again important for this. And then they also hit into that red area, again, lower high from the previous higher high. And yeah, we're overall just seeing weakness. So key point there. Warwick says, nasty is the word. Yes, exactly. If you have more questions, guys, please feel free to ask them as well. We'll answer them now. All right, let's go to some other things. So last week, or actually 2 weeks ago, we had one on our charts that we kind of had like a chart of the week, which we like to bring in. Now, my chart of the week from about 2 weeks ago, and I think it's important we revisit these and have a look how they've gone and learning curves and learning things, experiences from them, was HSI, which is the Hang Seng and generally the Chinese market. Now, it made a pretty big move today. So we were talking about the turn. Now, obviously, the news is bad. The sentiment's bad. But the reason why I want to mention this is because when you really put it out on a perspective and you look at this, of course it's bad. It's been bad for a long time. The market's pretty good at sniffing out issues. So from February 2021, it's basically just sold continuously. Now all we hear is terrible news. Yet the price action has actually been improving. So we've got a mixture of breakouts from 20 moving averages. We've got a mixture of strike price action looking better. And as we mentioned around this level, we were starting to see the signs of strength from a technical standpoint. Now we've gone above 16,500 for the first time, which is a fairly big deal. And if we do end up holding above that, it's another catalyst event here potentially for these markets. So it's just to show you there's different opportunities. I often talk on these streams and the programs that we do about the idea of abundance mindset. So what that really means is that we always have opportunities out there. There are so many markets out there, and it doesn't really matter what you're trading, what instrument you're trading, as long as you have a replicable setup. So there is a lot of different options, and I think this just shows you that. All right, let's answer another question here. Tom, do you use a simple MA or an exponential moving average? So 20. If you go, I do actually quite like the exponential moving average, but the one that's kind of the industry standard would be the simple moving average. So that would be the industry standard across the board. Okay, Zachary, good luck. Hopefully that works out for you. I do hope that works. It's always good if you get a one. Let's take a look at the VIX, because this is all important as well. There we go. Hopefully it's still all good. Maybe it's our hot weather or something. It's browning out the internet today. So here we've got the daily and the VIX. Now, the reason I'm bringing the VIX up is we haven't spoken about the VIX on pretty much any of the things we do for quite some time. It has been one of the worst indicators for quite a while, and the VIX has made some big changes. But one of the things I want to mention here was the VIX in 16. So 16 is a very important level for the VIX, and this is a level where we get kind of like a switch, what we call like a switcheroo. Often 20 is considered really where we go from a bull market potentially into a bear market or into a weakness market where the bears are in control, because above 20 shows extreme volatility and below 20 shows generally a calmed market. But it seems like 16 this time around is big. And the reason why this is because there are similarities with 16 to what we saw back in 2018. So if you've been trading the markets for a while, you may have remembered there was these Volmageddon levels where basically we had people betting on really low volatility for a long time. They were effectively short vol, which is a concept. And that short vol concept squeezed against squeezes of GameStop and AMC. There were squeezes like this. You can see that led to massive rallies. Then we had, of course, the trade issues. But over here, we had that Volmageddon. Now, we could be going back into a similar time period for that because arguably, or not even arguably, for a while now, one of the most popular trades has been short volatility. Not something I would usually do. But the reason I bring it up is because the VIX is at that point where we don't usually trade it, but it's nice to look at and see what happens. If we get above 16, obviously, we would probably expect the 20 moving average on the S&P to be breaking below. We would expect moves on the dollar. We would expect moves on oil. We would expect moves on yields. And this is all happening ahead of two things. As it's full circle, guys. FOMC, 2 p.m. today, Eastern Standard Time. That's American time. And then we have NVIDIA earnings after the close. So two catalysts, big levels, and I think a very exciting market with lots of volatility coming in. Lots of volatility coming in. All right. Well, look, thank you so much for participating in today's chat. If you did enjoy the content, please make sure to sign up down below so you can receive it. We do it every single Wednesday at 8 p.m. Australian Eastern, I think it's standard time or domestic time at this time, daylight savings time, at this stage. And then that will change to just normally 8 p.m. on the East Coast. We do love doing them. If you enjoy them, please give it a thumbs up, as I mentioned. Let us know in the chat and comments, and get ready for some pretty weird and psycho markets because I think the volatility is just heating up. And this means that key levels can bring momentum, and momentum can bring great day trading, great scalping, and of course the swing traders back into these markets. Whether you're a currency trader, commodities, cryptos, or stock or indices, I think there's going to be plenty of opportunities very soon. Thank you so much, everybody. And we'll leave you with this outro, and we'll see you next week. Bye for now.